Welcome back to John Orfer's Note. The European Central Bank meets again on Thursday. It's done a lot this summer to save the euro, but the eurozone economy is looking pretty weak and there's deep recessions across much of southern Europe. So could the ECB do more to stimulate growth? Here to discuss with me what the ECB might do is Tanguy Le Saout, who's head of European fixed income at Pioneer Investments. Tanguy, if we look at our first chart, we can see how much the ECB has done during the financial crisis, cut very steeply 2008, 2009, raised rates in 2011, but now they're back again at historic lows. Do you think it could or should cut rates again?
I think overnight deposit rates are very close to zero, so therefore there is very little upside in cutting again interest rate.
You mean the main policy rate though is at 0.75, that's the one everyone focuses on, but the point you're making is that the overnight deposit rate, which is what the ECB pays banks to put money with them, is zero. So in effect they're not earning anything on that. But they could charge banks to park money, they could have negative interest rates, stimulate the economy by making banks lend more.
Yeah, but I think again on the very short end of the yield curve there is no problem. Okay, the condition on the bank lending is actually not that bad. What they need to achieve is much more through different countries, better rates.
Okay, what do you think the ECB might be thinking about the eurozone outlook? It has weakened. Do you think are we at the bottom of the recession?
I think it's expected. If you do fiscal tightening and you attack the structural deficits, you generate weaker growth, and it's normal for that to happen.
Okay, so what's the prospect then for 2013?
2013 depends on different countries. Overall, some countries will have more fiscal tightening, like France, and some countries will have less fiscal tightening, like, such as Italy.
Maybe the ECB will just want to wait and see what happens.
I think so. In the end, as long as we have fiscal tightening in eurozone, that's stressed enough the economy, so therefore there's no need for any change of policy rate.
Okay. One thing you mentioned before was whether cutting interest rates would actually have any effect. The question is, of course, whether monetary policy can actually work in this current environment. Do you think it can? Has it lost effectiveness?
I think the transmission mechanism was broken down to some point. I think we need to see the effects next year if the tightening of the spreads of the peripheral country will lead to a better financing condition for corporate in periphery.
If we call up our second chart, we've actually looked at the interest rates that small businesses in the eurozone are paying on loans up to 5 years. They're small loans up to €1 million. And what we see, perhaps you could just describe what we're seeing in this chart.
Yeah, you can see that overall for core and semi-core country, the financing costs are getting lower and still low and stable.
Germany and France, yeah.
Whereas for the peripheral countries such as Spain, Italy, the cost of financing is still quite high, and therefore what ECB should achieve is to lower convergence, if you want to, of those spreads or rates, peripheral versus core.
In other words, what happened is, although the ECB cut interest rates very steeply, it still led to borrowing costs going up in the periphery and therefore presumably hitting job creation and so on.
Indeed. So by having better condition into financing costs and more stability, obviously that will help to corporate to have a better outlook and be ready to invest and for the future.
So how's the ECB going to change that? How's it going to continue that little improvement we see at the end?
I think part of the EMT announcements was part of that.
That's the bond buying program.
Yeah. I think since this summer we've seen quite a sharp, a sharp tightening in the peripheral spread in government bonds.
Yeah.
And that's the first step. Then after that, the banks spread has been as well getting tighter and tighter. So therefore the financing condition, we should see that next year on peripheral should get better.
Thank you, Tanguy. So if Tanguy is right, don't expect any cuts in ECB interest rates anytime soon, but more time, more work perhaps to ease those tensions in the periphery.